Hey, how's it going, everybody? This is Mike Weber, your Los Angeles real estate broker, here with your market update for the Los Angeles County and South Bay Beach Cities areas for the beginning of December 2019. So definitely some changes in the market, or what I should say is a further strengthening in the market that I think we will find is very closely correlated to the falling mortgage rates or to the low mortgage rates that have been present in the market throughout the majority of this year. So to start out, we'll just take a look at general mortgage rates, 30-year rates here on the Fred website. And what we see is that in November 2018, we kind of peaked out here at 4.94%. And all throughout 2019, rates just fell and fell and fell. And they've been relatively stable here at this. Right now, they're at 3.68 as of the last measurement, just towards the end of last month. But they've been pretty stable, 3.5, 3.65, in that range for the last couple months, or almost the last 6 months, actually, which has really, really started to boost the real estate market again. And once again, we are starting to see a very competitive market, both in Los Angeles County as a whole and in the South Bay Beach cities. So if we start out here, we'll take a look at Los Angeles County as a whole and see what's going on there with median prices. And although some of the other stuff that we're going to take a look at is showing a much stronger change in trend or movement in the chart, we are seeing still a modest increase in median prices year over year of 2.4%. So not a huge increase. We are certainly up a little bit compared to a year ago. But it is relatively flat. Now, in the South Bay, this is not the case. Prices have gone up drastically year over year for the last month compared to Los Angeles County as a whole. So obviously, each market, each city specifically is going to have different numbers. And it probably is good to just look at the county as a whole, because that gives you kind of an overall picture of what's happening with real estate prices in general. But that being said, other sub areas like, say, the South Bay have moved up vastly, which we'll take a look at in just a moment. Now, if we move on here and we take a look at the supply of inventory on the market, we saw a huge reduction, 22.2% year over year decline. So if you compare to a year ago, inventory is now down 22.2%. I'm certainly seeing it out there in the market. There's just less stuff on the market. Things are heating up. Multiple offers are becoming common again. There's a lot of buyers looking for properties. So it's amazing to see and how just 6 months, 1 year's time, how the market swung from being a little bit soft and starting to show signs of weakness to going right back to showing extreme strength, lack of inventory, prices rising, so on and so forth. And really, all of this activity is directly correlated to those falling mortgage rates throughout the entire year, which has certainly spurred on this renewed excitement and growth out in the housing market locally. Now, if we move on and we take a look at closed sales in Los Angeles County as a whole, they are up modestly, 4.5% compared to a year earlier. So not a huge increase in closed sales considering year over year figures, but certainly a positive number as well. Now let's dive a little deeper. We'll look at what's coming out of the South Bay Board of Realtors, which should give us a pretty good snapshot of the South Bay in general and what's happening in that sub area. And what we see here is massive year over year growth, a massive uptick of 17.6% year over year in median home price growth. So that is a huge, huge change. Now, granted, we were seeing prices pretty flat and in some months falling year over year. So from that lower base, they have started to go up. But more importantly, as we know, towards the end of last year, we know that mortgage rates had risen substantially, and that was dampening the market very significantly. And for that reason, now when we compare to 1 year ago in November, we're seeing this huge, huge, huge boost in the median home sales price in that area. So I think it's going to be really interesting to see what happens in the next, say, 4 to 6 months or throughout next year. Obviously, during the holiday season, November, December, things slow down a bit. There's less inventory in general. Even through January, February, activity is low. and then it starts to kind of pick up, and we start to see the upswing in just general activity. So I think it's going to take 3 or 4 or 5 more months before we see if these prices are going to continue to rise as a result of these low rates. Again, as I've shared in previous videos, I don't anticipate rates getting much lower than they are now, even with the Fed continuing to lower the federal funds overnight rate. They never got much lower than they are currently, even when the federal funds rate was at or close to zero for an extended period of time. So I don't see why they would go lower. Of course, unless we end up in some sort of negative rate environment, which I mean, as unlikely and as crazy as that may sound, doesn't seem like an impossibility at this point, as well as considering what's happened in Europe and some other countries that are experiencing negative rates on treasury bonds or bills and other bonds from companies, etc. So if we take a look here at the supply of inventory in the South Bay, we see a pretty dramatic drop here as well. 17.9% drop compared to a year ago. So definitely things are changing. We're going back into this kind of period here where inventory is starting to get really low, which creates a lot of competition. It drives prices up. There's just not much out there for people to buy. So the people that have money end up bidding, way above asking. And it's a very difficult market for buyers to get a property in. And it looks like we might be heading back into a similar sort of period here in the future, depending on what happens. Now, if we take a look at closed sales in the South Bay, unlike Los Angeles, we see a huge uptick compared to a year earlier. So 26.4% increase in closed sales compared to a year ago. Now, granted, last year was a pretty soft year. As you can see, the peaks are not quite as high. All this activity did not take place in all of last year. But that being said, it's still a huge increase. And this is the reason why inventory is falling, because a lot of this inventory that was kind of sitting or wasn't selling as easily is starting to be absorbed more quickly by buyers, which is limiting the amount of inventory because there's not enough sellers listing their properties to replace it quickly enough to keep it level or have it continue to rise as it was towards the end of last year, beginning of this year. So I hope this information was useful. If it was, do me a favor and go ahead and click the like button, click the subscribe button. And I'm definitely interested to hear what's happening in your area. So do me a favor, let me know what's going on in your area. Let me know what you're seeing out there in the market in the comment section below. And as always, if I can help you with anything real estate related, anything in the Los Angeles County area, don't hesitate to reach out, shoot me a text, give me a call. I'm always here to help. Thanks so much for watching. We will see you in the new year. Take care.